The Federal Reserve starts its two-day meeting today, which may result in the first interest rate hike in 9 years. Ted Peters, a former board member of the Philly Fed and current chairman and CEO of Bluestone Financial Institution Fund, joins us to discuss the likelihood of a rate hike and what it will mean. Ted, thank you so much for joining us today. How are you?
Great to be here. Thanks for having me.
Absolutely. So I've heard a lot of news that the Fed's rate hike, whether or not it actually happens, has already been priced into the markets. What do you make of that?
Well, I think it certainly has. I mean, there's been so much anticipation that rates are going to go up. Just a question of when. Is it going to be September? Is it going to be October? Is it going to be December? I know the equity analysts I've talked to, as well as the fixed income analysts, have all factored this thing in. So whether it happens tomorrow or whether it happens in October, I don't think that really matters too much.
Okay, excellent. And I have to ask, where do you think rates will go?
Well, I've been a proponent of rates going up in September for quite a while, and I've gotten a little bit of heat because of it. But I think if you look at the Fed's mandate, which they have a dual mandate, one is full employment and the other is price stability, I think those things are looking pretty positive. So on the full employment side, unemployment is down, U6, another unemployment measurement is down, job openings are up. There's a lot of really good things happening in the employment space. Jobs created have been very consistent as well. Inflation is, not hot, but it's coming up. Inflation, I think, is running around 1.2, 1.3. So I think those things combined, I think Janet Yellen will probably, and the FOMC, will raise rates tomorrow. Okay,
and do you see them signaling any other, in their language, what a rate hike after that would look like, or what the trajectory would look like?
Well, you're right on. The language is probably more important than the actual rate hike here. Mm-hmm. And so if the language is that we're going to continue to be tighten as we go forward, or that we're going to be more accommodative, or we're going to wait and see, I think the language is probably more important whether it goes up tomorrow or goes up October or December. And that's what people are going to be reading as well.
Okay. Well, thank you so much for joining us.
Yeah, great to be here.